Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So in this video, I'm going to take a page out of O.J. Simpson's book, and you know how he wrote that book, like if I did do it, here, and then he just like wrote this huge book about what would happen if he did it. So I'm not saying I'm a velocity banking cult leader, but if I were a cult leader, here's my call to action, right? So as a velocity banking cult leader, I'll be honest, I'm a little bit lonely. And why do I say that? Because I paid off my mortgage under 3 years. Now, I'm not saying results are guaranteed for you. Whatever you experience is your own personal situation. But sometimes I tell other people, like, hey, I paid off my mortgage in 2 years and 9 months. And you know what they do? They just randomly stare at me and they act like they didn't hear me. And I'm like thinking inside, I know you heard me. I know you heard me, buddy. But you act like you didn't hear me. Because I've been able to do the unbelievable, right? And why have I been able to do the unbelievable? It's because of what I'm going to talk about today. Now, before we actually just kind of get started for the call to action, let me go ahead and ask ChatGPT this. Why is it when I tell other people that I paid off my mortgage in 2 years and 9 months, right? They look at me with a blank stare and act like they didn't hear me when I know they heard me. Okay, let's see what happens.
When you share something as extraordinary as paying off a mortgage in under 3 years, people's blank stares or non reactions might stem from a mix of emotions or psychological factors. 1. Shock or disbelief. For many, paying off a mortgage quickly feels impossible or unattainable. Hearing someone achieve it might leave them stunned and unsure how to respond. 2. Comparison trap. Your achievement could make others reflect on their own financial situations. This internal comparison might lead to feelings of inadequacy or discomfort, causing them to freeze. 3. Lack of context. If they don't understand how you achieved it, they might feel it so far removed from their reality that they can't process it as something achievable. 4. Financial taboo. Talking about money is often seen as a sensitive topic. People may react defensively or awkwardly because it brings up their own insecurities or questions about their financial decisions. 5. Cognitive dissonance. Your story challenges their beliefs about debt and mortgages being lifelong burdens. Instead of engaging, they might shut down as a way to avoid reconciling this new perspective with their existing mindset. 6. Unspoken envy. Some might feel envious or resentful but won't express it openly, leading to muted reactions. Their reactions aren't a reflection of your achievement, but rather their own emotional or cognitive responses. For those who are ready to learn or are curious, they'll likely engage and ask questions once they process what you've shared.
And this is the type of people that I am looking for. Okay, so here's the thing: if you want to support this cult, Velocity Banking Cult, there's three main ways. Number one is subscribe. If you are budget conscious, saying I cannot spend any money, you can subscribe. It's totally free. If your budget is at least $1, okay, or at least 99 cents, then you can go ahead and join the YouTube channel membership. It's just once a month. So you get two benefits, access to two benefits. Number one is a once a month live stream, and then number two is access to exclusive emojis, okay? And then if you're not so budget conscious, if you're willing, well, I don't want to say budget conscious. Let's say if you're willing to spend money to get educated and up your financial and wealth building game, then I'm going to share with you where I learned a lot of the stuff that I talk about, which is Renatus Education, right? And the Renatus Education, there's two levels of packages, okay? Number one is what we call the essentials, the financial literacy and real estate investing foundations, right? Which is $2,300, but you only get 12 months access to it. Now, if you want complimentary lifetime access, not only would you just purchase the essentials, but also what you call the AIT, which is the Accelerator Investor Training. Now I'm not gonna go over too much of what it's about, but if you want lifetime access and want to really join this cult and join our super secret online cult space, then you would purchase the complimentary lifetime access package with 40 plus classes. But take a look here. This is taught by practitioner instructors. Some of these people you might even recognize on YouTube, like Matt Sorensen, Self Directed IRA, Mark Kohler, Tax and Legal. But this is where I pretty much learned a lot of the stuff that I talk about in this channel. And so I kind of think of this as my brainwashing facility where you have access to classes that are structured in a way where you can just play them over and over and over and over and over again, right? Where do you think I learned the basics of velocity banking, real estate investing? I learned it all here. Take a look at this: velocity banking, right? Learning how to find deals, learning tax and legal, understanding credit. Remember, I talked about you need to understand credit if you're going to get it. And I also talk about banks don't lend money to people who need it. I learned that from Renatus. Okay. So if you're interested in being part of the super secret cult and being a lifelong learner, go ahead and click the Google form link below to find out more about the Run Honest Education. Or if you're a little bit budget conscious, do one of these two things, which is subscribe, which is free, or join the YouTube channel membership. Now, as a velocity banking cult leader, this is what I got to do after every single one of these videos. I got to just do another velocity banking exercise. So let's go ahead and do that right here. And we'll just go ahead to this spreadsheet. And let's just do a practice one that we've done before, right? $135,000 gross salary, right? Okay. So all we got to do is copy and paste these, okay? And then let's just go ahead and do it. And actually, let's start from the beginning. So, what is velocity banking? Well, all it is a debt payoff strategy where you're throwing all of your money into debt with and not having any savings, right? With the help of a line of credit. Okay, so what's a line of credit? All it is a financial tool where you can borrow money, pay back, and use it over and over again. And so we have a credit card right here. We also have personal or home equity lines of credit. Those are lines of credit, right? And I have my own what you call home equity line of credit here. Okay, home equity line of credit for $280,000 limit. So think of it as a huge credit card based on the value of your home. That's what a home equity line of credit is. Okay, home equity line of credit. And so what we're going to do is we're going to assume we have access to a home equity line of credit, a $150,000 line. Although in many cases this actually would be unrealistic because banks don't lend to you when we need money. Okay, just remember that. You know where I learned that from? Renatus credit courses. I actually learned that from here. So if you want to brainwash yourself and play these classes over and over again with me and learn it with me, I'm not going to teach you anything, but we're going to learn together. Go ahead and click the Google form link below. Okay, so first thing in order to do velocity banking is the budget, which we're going to do right here. So we're going to just copy and paste this right here. Expenses, and this is one of the most important things, is that we don't have any savings, yet we have something called cash flow, which is income minus expenses, which looks like savings. Now I was like, what does this mean? What does this mean? What does this mean to have no savings but cash flow, right? So if I take a look here, this is what I mean. My checking account statement where I start off with zero and then I end with zero. That's what we mean by zero savings, and we're dumping all of our money as soon as it comes in into that line of credit. Okay, so what we're going to do is make sure we pay off the debt correctly. And we have these 4 credit cards. And how much is that? That's $55,000 of credit card debt. Let's move that to the line of credit. So 55000, right? And then guess what happens when we move that debt into the line of credit? Well, blam, these go to zero. Okay, and now you see that as a struggling lawyer with only $200 left in savings, now we have $2,000 a month in cash flow. So what do? We dump our entire paycheck into the line of credit. We take our expenses out, and then after every single month, the balance of the line of credit is going to go down by what we call our cash flow number. Okay, so let's go ahead and calculate this. And I'll just delete this one for now because I don't want to talk about our new savings account just because I'm a little bit lazy. And let me format these numbers correctly. So give me 1 second. Format cells, number, and this is a currency right here. And no, I do not want British pounds. Or is that euros? I don't even know what that is. Oh, they got Bitcoin. Interesting. That's new. All right, so let's go ahead and do that. And all right, okay. So what we're going to do is we're going to calculate the interest, which is based on the average daily balance of, uh-oh, this one right here. What did I screw up? All right, these two numbers, because your interest is based on the average daily balance, multiplied by the interest rate, which is 0.08, and then divided by 12 because it's calculated monthly. All right, so now what we're going to do, okay, is get the next month's balance, which is the previous month's balance plus the previous month's interest minus our cash flow, 1956.56.76, right? And then what we do is we take the next month and then Control C, Control V, and then we see that the balance is going to go down approximately about this much plus the interest, okay? And we just keep copying, paste, and look how easy that is. Look how easy that is, okay? So now, let's go ahead and do this. And, ooh, I don't like the font here. You see how it's not red? You want to see how to change that? Let's go ahead and do that. Let's change that. So format cells, number, and then we got to change this to the red with the negative number. Sweet. Okay. So we got that covered. Actually, I like this one better. Oh well, whatever. Okay. All right. So we got that covered. And then in month 32, oh my goodness, we paid it off. 32 months, right? So 32 months. And we paid off 55K of debt. Wow, that was amazing. This line of credit was a lifesaver. Too bad we probably won't get it at this moment because banks don't lend money to people who need it. Wink, wink. And so now we have these three loans that we're going to try to get rid of. Let's fill out the loan calculator. So if you want to see me fill out the loan calculator here, I just copy and paste this. And then I fill out the appropriate numbers. Okay, so this is 20,000 at 7%, right? Oh, shoot, I screwed up. Let me copy these formulas right here. Is there anything else that I need to? Okay, so let me do this right here. All right, so 7%, $130,000 at 5.4%. At how many years? 30 years? No, 10 years is a law school loan. And then the mortgage is 300,000 at 3% for 30 years, right? So now let's make sure this is calculated correctly. So how many months did this take? No, this is the wrong Velocity banking sheet. I got too many of this. So this is 32 months, right? 32 months. So we just type in 32, 32, 32. And then we see with the auto loan, okay, that we could just pay this off and move it into the line of credit. Sweet, let's go ahead and do that. So we're going to do that right here, okay. And then we're going to add 100203.08. And then, okay, this is going to go to 0 by moving the auto loan. And so now the $2,000, right, the $2,000 right here is going to be this. So 2352.78 is our new cash flow. And let's go ahead and copy and paste this. And whoa, take a look at that. In 36 months, it's all paid off, right? That was the 4 months to pay off an auto loan. That was so easy. I can't believe it, right? So this is going to be 75K. And then now what we got to do is take on the law school loan. So let's go ahead and figure out after 36 months what the law school loan is. And so this is now 0. And then 98,000, right? 280,000. So now, okay, what do we do with this 98,000? Well, we could move it into the line of credit and get the $1,400 of cash flow back. We definitely want to pay this one off first because take a look at the balance to payment ratios. Would I rather pay this 98,000 off and get 1,400 back, or the 280,000 and get to 1,200 back? Right? This is not giving me enough bang for a buck, so I'm okay with paying the 98,000 back and get the 1,400. Although maybe I do want to use what we call the chunking method, which I'll go over with the mortgage. But let's move this one to the line of credit for now. Ooh, let's go down here, and then I'm gonna move this 90 something $1,000 loan plus 98,055.26. And when we move that loan there, guess what happens to our cash flow? This goes to 0, and then our cash flow is now above $3,700. So not bad for having started with $179.26. So let's go ahead and do that right here, and then update our cash flow, which is minus 3757.19. And then I'm going to go ahead and do this, and we'll see how long it takes us to pay off that law school loan. And we see that in 64 months. Ooh, that was not that bad. 64 months. And unlike other types of loans, you can never declare bankruptcy and get rid of it. So at least that's good. We got rid of the loan we can't get rid of in bankruptcy. And so now this is going to be 130K. No, not 130K. This is 205K. What am I talking about? And then last one is the mortgage. So in 64 months, let's figure out what the balance of the mortgage is and how much did we pay off. So to figure out how much we paid off, minus 264, we paid off 36K in 64 months. That's not a lot, right? Even at a 3% mortgage. But let's move this 36K into the line of credit. So this is what we call the chunking method, meaning that we're just moving a piece of the loan into the line of credit. So 36K, and our cash flow is still the same, okay? So how long does it take to pay off that 36K? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about 10 months it took us to pay off. Whoa, 10 months to pay off 36K. So right, 36K. That's amazing. So if I multiply 36,000 times 6.4, right? So I'll go ahead and do this, then I could have paid off 230,000 in about 64 months. My mind is blown, right? And so here's the thing. Let me go ahead and open up the Velocity Banking Calculator. Give me one moment. Wow, look at that. Here we go. We have the Renatus Velocity Banking Calculator. Awesome. So let me go ahead and fill in the details here, which is a $300,000 3% loan. So let me just do that right here. I just got to fill in the details. 300,000. 3%. What's the mortgage payment? 1264.81, 1264.81. And then what's the current balance? It is 264,318.05. 264,318.05. And then let me just kind of wipe these out and these out. So what's my expenses? We'll take a look right here. It is 2,500 right here. So we include everything except for the mortgage payment because the mortgage payment is included here. So more expenses is 2,500. And then what is our income? Our income is 7,522. So 7,522. And then this chunk amount is it just has to be, it doesn't have to be like a high amount. So for example, if I replace the mortgage with the line of credit, okay, take a look here, 5.5 years and 63,000 in interest. But if I just do a small chunk, like let's say $8,000, take a look at this, 20 grand. So you just do a small chunk compared to your monthly, or that's comparable to your monthly income, and you should be good to go. So that's what we're going to do here. And then bam, 4.8 years. That is awesome. And here I am financially free. So 64 divided by 12 64 divided by 12 plus 4.8, which is 10 years and 10.13 years to be debt free, right? So, bam. Now, here's the funny thing, okay? You know how there are those velocity banking videos where it's like, be mortgage free in 7 to 10 years? Well, this one we're 4.8, right? We're 10 years if we were completely screwed. You know, if we're like nothing left over, oh my goodness, what do I do? Then we're debt free, right? So, again, where did I learn all this from? Renatus. But don't just learn velocity banking. I'm telling you, there's a next level. How do you think I kind of keep getting lines of credit or, homes at a discount? Well, I will get homes. I only got one. Okay, just being honest with you here. But how do you think I keep getting lines of credit? Because I understand credit. I understand a lot more things than just velocity banking. So if you want to um, take it to the next level, go ahead and click the Google form link below, and you join and support this velocity banking cult. Okay. All right. Well, that's it for today, everybody. Have a great day, and we will speak next time.